Welcome to Get Serious, recording this at the end of a day. A lot of meetings and back and forth. Some very exciting developments here. Something that I've kind of been mentioning in passing and, how we're trying to break through a plateau within our business. And trying to go up market is just realizing, we have to be going after bigger deals. We've started building more of a track record with them, and we're not going to, get to 10 million and beyond if we just keep doing the same thing that we have been doing before, kind of regardless of the volume, because in terms of quality of deals, it doesn't necessarily grow in conjunction with the volume of operators that we might be dealing with. In other words, it's like there's so much volatility in this industry and churn that even if our name is out there and we have a bigger audience and different folks might be bringing deals, the consistency is in terms of getting kind of repeat deals coming in and just being in more of a down cycle market. I know a lot of folks that, aren't even necessarily using funding or working with other funders, like they're just struggling to find deals anyway. So it just leads to more dead time within our business, to where even though our brand is probably, the most recognized it has been so far, that's not necessarily translating to more substantial growth within the business, because we have to kind of keep recycling more deals from, just new operators coming in. So we're just, having to acquire new clients every single time versus like building in some more repetition, basically. So I wanted to kind of combine the approach of going up market, both for larger operators and just more incentivized realtors, higher quality realtors, as well as finding folks who just have more staying power within the industry as well. And generally, they're going to be going after larger deals on average. And so, we've also realized, like, is it really worth us? We already had a 20K minimum, but we preferred 50K buy prices. And we've had a number of success between that 20K to 50K band, including, a couple this year that were like 20 to 25K buys that, one of them, one 20K buy sold, or it's just about to sell for 60. Another one was like a 25K buy that went under contract for 105, I want to say, but, we sold it via owner financing. So we took a 20% cut to sell a note. So all back to us net of closing costs is like maybe 75, so still like well over a 2x. Great deals, but after the splits and so forth, like it doesn't dramatically change the outlook of our business. So it's like, okay, well, I would rather have more opportunity and capital available for larger deals. And so we just adjusted all of our public messaging, email messaging to up our minimum now to 50K purchase price per deal, with a preference for going 50K plus going forward. Because when I'm really trying to sort out, okay, how do we go from like a roughly $3 million business up to 10 plus? Again, we know generally the kind of law of tripling business is that every time you 3x your business, you kind of hit another wall, and you really have to change your whole strategy in order to get to that next 3x. And so we're right at that moment now. So that's just a lot of my time that I'm spending is trying to figure out, how do we adjust our strategy to kind of push through to that next level at the same time. The real estate cycle could be better in a lot of parts of the country, but it's like, people are still going to be doing deals either way. It's not like everything is completely paused. So, some people are going to succeed. That may as well be us. You just have to adapt and be more agile. So that was a strategy that we were setting up today, and almost, kind of serendipitously is that a larger operator who had sent us something roughly a month ago, and we didn't fully understand the deal because we just didn't have the context. And, initially I didn't think it was as good, but, once he had sent over what the deal actually looked like, I'm like, yeah, I probably would have done this deal. And it was like, yeah, I don't know, maybe a 350K purchase price. deals selling for roughly double that, a minor subdivide. So I'm like, yeah, mea culpa. We should have got on a call earlier. Again, that's, sometimes to my own detriment. It's just we get so much volume coming in. Like I can't be on the phone all the time in order for us to handle all these responsibilities. So I try to shift a lot to just text messages and email and having my assistant handle so that I can, we can look at the deals prior to having any calls there. But, that's the price of scaling and having a growing business. Sometimes you're just going to miss some things that should have been handled more individually off the bat. But now, a month later, I was on a longer call with this individual and just like, yeah, they're an under the radar operator, but are doing really significant business. Plus, they had worked in SFR for a while, have their own development company too, so they can, actually do horizontal development on various subdivides in the areas that they operate in. A really sophisticated operation with the type of deals that we like to do, and work with other equity funders at splits that are appropriate for what we would look for on some of those deals. North of 200, 300K purchase prices in areas of the country that I would like to focus on more as well. So very, very exciting and interesting conversations. It's like, okay, I've been a bit more concerned with, having less acquisition activity, even as we're coming into like our, most profitable month ever at the moment. It's like, well, I need you got to keep things moving along, because even if profits are coming in here, if the inbound and potential deals is just slowing down, like that's not a great sign for the business either. This is exactly what I was hoping for, is just to find, okay, can we more reliably find these 200, 300K buys over the coming few months? And then anticipating this Louisiana deal to sell over the next 6 months or so should have even much more significant capacity to invest in a lot more deals as well, that are just with, higher upfront cost for the deals and give us the opportunity to really expand our operations much more significantly. So I'm really trying to, again, both be patient as well as growth focused for the coming year, and just ensuring that we can set up sustainable success over the coming 30 to 40 years, and have a feeling that this current year will probably be relatively steady from a top line revenue, but really think we can get that 3x plus growth heading into 2026 based on the strategic shifts that we're making, and the type of deals that we are pursuing. So just wanted to share that there. And in the meantime, sometimes like it can be a little bit slow, but we also had another 70K deal actually in Tennessee. I know I've gotten killed in that state recently. It's like, okay, you're really going to go back to that well, but at the same time, you have to be aware of, is this deal, does the underlying data and market justify a purchase? You can't necessarily be scared away just because, a certain state didn't work out for you, but it's different markets, it's different opportunities, different risk factors. So we're probably going to take that one down over the next couple weeks or so. And then a larger transactional deal, almost like 200K, going to be rush service start of next week. Transactional, I'll do those deals all day long. We handle them much more conservatively, though. Our paperwork's probably a little bit more, tricky to kind of go through, at least for the title company, not really for the originator. It's just, title companies are used to dealing with things that their way. It's just, we try to keep our risk as close to 0% as possible on transactional deals. And so we just go through it a little bit different setup. So that one should be a nice little burst. It's like, you got to pull revenue where you can in a market like this. And so long as it's not overly distracting from your main growth trajectory, if you can still put some of these deals together and book some more revenue, keep things churning and stay ahead of your overhead that is the name of the game here. So just wanted to share that, a little bit more strategic updates, some of the conversations we've been having where we're trying to grow our new limits, and the types of deals that we are going after now. Very, very exciting times. I'm feeling sometimes the nature of being an entrepreneur, it's like you can have one conversation that just kind of shifts your mindset to be feeling even that much more optimistic. And I'm certainly feeling that today compared to even like the last 3 or 4 days. But anybody who's been running a business for even a short period of time, it's just you start to get used to the ups and downs here. It's like I thought one day there was just going to be like just this full, not even a steady state, but just like riding high. I'm not really going to be dealing with problems or down times. It's not realistic. So you just embrace it and try to solve things as they come up and feel good and productive during it. And that's where we're at today. SeriousLand.capital for any of your funding needs. Check us out. Land Daily Diligence Facebook group, zero cost review of your land deals, and landpricer.ai for the most reliable land pricing tool on the market. Looking forward to talking to you next time. Subscribe and share. Take care. Bye.